In this video, I'm going to show you how I got my clients to pay zero tax on their Social Security benefits. Welcome to Mark's Financial Playbook. I'm Mark Basil. The three most asked questions I always get: will my ex know if I claim half of their benefit? Can I still work and claim my Social Security benefit? And the number one question I always get is, do I have to pay tax on my Social Security benefit? I've already paid taxes on it. Well, the answer is maybe. Why? Because first we have to solve for provisional income. Who knows what provisional income is? That's what I thought. Maybe some guy in Toledo, Ohio, but most people don't know what provisional income is. The schedule hasn't changed since 1983. Let's take a look at it. So this is the schedule that the IRS uses to determine if they're going to tax your Social Security benefit. Unfortunately, it has not been adjusted for inflation, and it has not changed since 1983. The formula that the IRS uses is all of your income, earned and unearned, all of the interest from all of your accounts, even including your municipal bonds, because municipal bonds are not taxed federally, and if they're in the state with which you live, they're not taxed by the state. But for the provisional income, you need to add that back in. And half of your Social Security benefit. So if you have $30,000 of Social Security benefits coming into the household, half of 30 is what? It's 15. So for the formula, you have to add half of that in. So there's a line item on your 1040, line 6B, that lets the IRS know how much to tax your benefit. My clients have $48,000 coming into the household, and they're not happy about having to pay tax on their Social Security benefit because they already paid tax on the way over. So I said, well, let's see what we can do. Let's take a look at the schedule that hasn't changed for 50 years. If you're a single filer and you could keep your provisional income below $25,000, then none of your benefit is taxed. If you're single and your provisional number comes in between 25 and 34, then half of your benefit is taxed at your ordinary income rate. Not a 50% tax, but 50% of your benefit that's coming into the household is taxed. If you're single and your provisional number's over 34, then 85% of your benefit is taxed at your ordinary income rate. And again, not 85% tax, 85% of your benefit is taxed. What about married filing jointly? So this is the strategy that we use for my client. But let's look at the schedule. Married filing jointly, if you're able to keep your provisional income below $32,000, then none of your benefit is going to be taxed. If you fall between 32 and 44, half of your benefit is going to be taxed at your ordinary income rate. And if you're married filing jointly and your provisional number is over 44,000, then I'm sorry, you're going to pay tax on 85% of your benefit. So you heard me say 85% twice for single filers and joint filers, which means that you get a 15% deduction from the government. Yay. So let's take a look at the strategy that we use for my clients. So spouse A had $28,000 coming into the household. Spouse B had $20,000 coming into the household. They had $7,000 coming in as a pension. They had $200,000 in an IRA, and they had about $100,000 in their checking account. But remember, we're trying to figure out what the tax on their $48,000 of benefits coming into the household is. So it's very important that you know where all of your income streams are coming from so that you can solve for provisional income. So their magic number, the number that they need, is $60,000. We did not take any money out of their IRA, because if you take money out of an IRA, it's a taxable event. So with the $100,000 that they had in their checking account, we took $5,000 from there to get to their $60,000. What happens if you take money from a checking account? Nothing. It's not recorded and it's not a taxable event. Let's solve this for provisional. So 28 and 20 is 48,000. Half of 48,000 is 24,000. They had the pension coming in. They couldn't stop it. That's 7,000. We took nothing from the IRA, and we took $5,000 from the checking. That number's 31,000. What does that mean? We go over, we look at the schedule, married filing jointly, 31,000 is less than 32,000, they pay zero tax on their benefit. So 48,000 of Social Security benefits coming into the household, and they pay zero tax on it. Now, it's not easy to keep your provisional income below these numbers, but it's very important that you sit down with whoever helps you with your investments or retirement accounts, and you do the math. So as we look at this schedule, I want to bring something to your attention. So you see they have an IRA that had 200,000 in it, and they have the 100K in the checking. Those were really the only two sources that we could have went to get income for them to get that extra 5,000. Had they had a Roth IRA, we could have taken money from the Roth IRA and it would not have been counted as income, and it would not have affected their provisional income number. They didn't have a Roth, they do now. We'll talk about that in a later video. There's going to be links in the descriptions of everything that we talked about today. There's going to be free PDFs. So if you have any questions, feel free to call the number, feel free to log on to the website. Either way, if you need some help, we'll get it for you. The second most asked question was, will my ex know if I claim half of their benefit? That's going to be in the next video. And then the other most asked question was, can I still work and claim my benefit? There's also going to be a dedicated video to that. We'll see you in the next one.